Welcome to the world of negative oil prices. So, in case you missed it, today the spot price of WTI crude oil went negative, and basically that's a reflection of the fact that when you add in storage costs and transportation costs, producers have to basically pay people to take crude oil off their hands. Along with that, we've seen a massive spike in crude oil implied volatility. So, if you think about what is implied volatility, it's a reflection of uncertainty, it's a reflection of high realized volatility, and it's also a reflection of demand for options. So, whether that's on the put side or the call side, and certainly there's been a lot of interest in this ETF called USO, which a lot of retail traders are piling into that, basically trying to buy the dip on crude oil. And certainly this indicator has actually been a decent bottoming indicator for crude oil prices. And finally, the perils of price ratios, and I guess also you could say the rise of absurdity. So this is the S&P 500 priced in barrels of WTI crude oil. I've always thought that this was a bit of a silly chart, but then it becomes even more silly when you put in negative oil prices. But, this is something that a sign of things to come, really, because, with all the crazy data that's being created at the moment as a result of the pandemic, we're going to see more of this kind of weird and wacky and wrong signals, really. So, something to keep in mind and watch out for.